That beep has got to go. Yeah.
Lock that thing next week.
It was locked. So in the modern world, there's this old perception of accountants that they're guys that sit in a corner cubicle somewhere and write all day long. That is very, very much not the case. Accounting is not only about collecting the information, but telling that story I've been talking about all night to others, communicating the information. So I want you guys to get used to that. And there are some tricks I can help you with in regards to presenting information to others. But it's all about clear communication. So as part of that, I like to have people come up and share their homework and go through it. It'll take about 2 weeks, and somebody will figure out how to do this, and I will then tell everyone what the trick is. Okay? So it's nothing to be afraid of. If you really, really don't want to do it, don't. But you're never, ever in your life going to find a more open and accepting environment to come up and talk in front of people than in this room with your peers who are also trying to learn the same material you are. Okay? Good? Questions? Anybody? Okay. With that said, I want to cover the schedule real quick just so everybody understands how it works and you can read it. For those of you who were asking earlier, everybody recognize this? No. This is... No? Okay, Cabrillo College main web page. I went all the way to the bottom. Web Advisor is here. Blackboard is next to it. Okay? So, if you go down and you click on Blackboard, it takes you to it. And where'd it go? What are you doing to me? What are you doing to me, man? Oh, it's a new computer. Great. Here we go. No, do not remember my web. Oh, good.
What's the A for?
Second letter of my first name. It's the email address they gave me. Okay. So this will pop up, and you have a list of classes over here. And this is 1A, so I'm going to click on this. And it lets you drop right into it. Here's the front page. Here's my email address, if you ever can't find it. Syllabus, schedule, grading policy. All the PowerPoint files for the class, information on the project. All of the instructor videos that I have done and will do as we go through the class are going to be in here. The book publisher's website for this book. Sometimes there's some good stuff there. I will give you assessments. I'll give you those multiple choice exams. The assessments are here. There's an information page which contains the syllabus schedule and so on. There's a discussion board. So if you guys are at home doing homework or you missed something in class and you want to ask other people, you go in here and you say, hey, does anybody know what he meant by blah, 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 or can anybody answer the question for problem number 6? You guys can communicate back and forth in here. And I check this and I go in and sometimes I answer them. Okay? Links to web pages, other fun stuff. So the thing I want to focus on is the schedule. Oh yeah, I accept. I want that bigger. Can we get it bigger? Can I get it bigger than that? Okay, good. Here's the schedule. This class. So we have 17 weeks total, including spring break, which I've highlighted down here. What? 4/2.
Oh, really?
Yeah, it's March 31 through the 7th or something like that.
First week of April.
What?
April 31st to the 5th of March.
Of March, yeah.
Yeah, the 5th of April.
So the date we would have class is Wednesday the 2nd. Okay? So, date, which is the date we would meet on, here's what we're going to cover in class. So tonight we're going to do Chapter 1. Next week we're going to do Chapter 2, Chapter 5. We're going to take a little test. It'll be a piece of cake. You guys are set. The assignment for tonight, after we cover Chapter 1, is here's some homework problems. Next week when you come in, we'll go over the chapter homework problems at the beginning of class. You guys can share. We can all go through them together. Okay? I treat you guys like adults. If you do your homework, you will do well on the exams. If you don't do your homework, you save yourself some time, but you're going to struggle with this class. I don't want you to turn it in. I don't want to check it. I didn't go and... There's a tool called Connect at the book publisher's website, which they charge you for, where you can go in and do your homework and some stuff. I don't want you to spend another $50 on this class, so I don't use it. I just treat you like adults. Fair enough? Okay, yes?
So the assignments on the homework, is that from the 7th edition? Or
Those are the problem numbers from the 7th edition. Okay? They will most likely be the same. Okay? And they will probably be worded word for word, except instead of saying Smith Consulting, it'll say Adams Consulting, and revenue will be $9,000 instead of $10,000. I mean, they're the same. So that's your homework. We'll cover it first, then we'll cover next week. But you're going to choose your companies and tell me who they are. Okay? The other part of not just choose your companies, you're going to go... The project is I'm giving you a hypothetical $50,000. You're going to pick one of the two companies from your selection, and I think this one's better, so I'm going to invest in Apple. Right? I used to have Apple and Dell, but Dell went private, so you can't get information anymore. So let's pick something else. There's Amazon and eBay as two of the competitors. So I think Amazon will do better. So I'm going to invest $50,000 in Amazon. Here's how many shares of stock I'm going to buy at X price. And then we see how it turns out down here at the end. So pick the company, find the stock price, which you can get online or in a newspaper, buy $50,000 worth of stock. Okay? Theoretically. Don't anybody go actually do it. Okay? And then you're going to tell me that next week for each group. Good? That's your homework for next week. And these aren't too darn bad. Questions on how this works? Yes?
Are we allowed to do problems in Excel?
Yes. Excel's fair game, but not required. Okay? As we come through this, so when we take assessment 1, project company analysis due, this is where you're going to go find some information on your company and you're going to do a little write-up for me. This one's not huge. We'll talk about it more next week after you've selected your companies. Okay, and you'll have 2 weeks to get it done. Down here there's market analysis and notes. You'll read through the notes of the financial statements. Down here you'll do a journal entry which tells me more about your company, and down here you'll do another journal entry. Okay? Fair enough? I think I've broken it down pretty good. 3 chapters, 4 chapters, 4 chapters, 4. So it's not too bad. And then there's a final exam at the end. The final exam is, the in-class written part of the exam is not cumulative, so to speak, but I mean, you need to know things from here to actually learn the things that are down here. So it's sort of cumulative in its own way. The multiple choice part of the final exam is cumulative. I can ask you anything, fair game. Okay? Questions on how it works? There used to be one more test, but spring break's kind of in the way. So we just lumped some things together. Good enough? Okay. Let's see. Is there anything else you guys would like to see in Blackboard before I close it? While we're here. Okay.
They discussed just being typed. How long is it going to take it to be
Oh, before I get the video up and online? Well, I'll go home tonight and it'll be 9 o'clock, so I'm going to bed. And I have class tomorrow night, so I'm probably going to go home at 9 and go to bed. But Friday, I'll process the video and put it up. Okay, so by Friday, Saturday, they usually should be up. Okay? All right. Other questions? Everybody's quiet. It's getting late. It's not even 8 o'clock yet. It's not even my bedtime yet. Okay? All right. So, let's go to a visual. Oh, what? My little controller thing's not going to work now? Okay, what else could go wrong tonight, right? Yeah. Don't tempt fate. From the current slide. There you go. All right. So remember, there are 4 financial statements. What are they? Balance sheet, income statement, statement of retained earnings, statement of cash flows. Good? Okay. All of these statements are connected to each other, and that pieces of information from one are required to prepare the other. So, they're prepared in a specific order. Always, always, always prepare your income statement first. And the reason is you need net income. Remember when we did our statement of retained earnings? Beginning retained earnings plus net income. Well, if I don't have net income, how am I going to do the statement of retained earnings? I'm not. So, income statement first, so you can prepare the statement of retained earnings. Questions on that? So, which one do you think is second? Statement of retained earnings. Because I'm going to need ending retained earnings from that to plug into my balance sheet. Because if I don't update the retained earnings for net income and I use the old amount, I won't be in balance. So by definition, balance sheet should do what? Balance. So I must update it through retained earnings first. So that means which one's prepared third? Balance sheet. Excellent. You guys are learning quick. Now, on your balance sheet, the first element under cash or under assets is always cash. Cash, when you're all said and done, must match ending cash from your statement of cash flows. So you've taken net income and calculated ending cash balance, and these two numbers must match. So there's your double check. So your statement of cash flows is typically done last. I guess it could be done at any time because you don't need the number to plug it in somewhere else, but you do need to tie it and match it. Tie it, i.e. match it to the balance sheet. Good? Okay. No? Who said no? Wise guy. Oh, okay. I accept no. That's fine. Okay, moving on. Every published set of financial statements will have a lengthy and detailed set of notes that go with it. They're not even notes. It's like a small novel. Lots of information goes in there about what accounting methods are used, what estimates are used, detail about things in both the income statement, the balance sheet. There'll be lots and lots of information in there. And that's great if you're an investor or a creditor. If I'm the banker and I want to read about this, and I find out that MaxiDrive really only has one customer and it's HP, and I read in the newspaper yesterday that HP is going to close down that division. Do I want to lend these guys money? No. Well, the fact that MaxiDrive really only has 90% of its sales go to one customer, that'll be in the notes. So if I'm the banker, I want to read those notes. If I'm an investor who's going to buy the stock, I want to read those notes. If I'm the company, if I'm MaxiDrive and I'm publishing all that information and sending it out to the world, am I happy? Well, it helps me get investors, it helps me get creditors, but who's going to go pick that up and read it? My competitors. So there's the double-edged sword. You're sharing all that information with your competitors. But you can also go get theirs too if they're publicly traded. So you can figure out some of what their plans are, where some of their strengths are. So it changes the competitive landscape a little bit. Okay? Double-edged sword. Let's see. All right, we've talked about managers, right? Inside the business, the financial statements are used to make decisions about how to run the company. You know, should we discontinue a certain division because it's not making a profit? Should we invest in a new area? Do we have the capital necessary to invest in a new plant in South Carolina? You know, all kinds of information in there. Basically, any business decision you could want to make is largely driven by data that's going to come out of these financial reports. There are other reports that there is no standard list of management reports, but management also has access to any internally prepared report. The four financials that I've told you about are what go into a published report that gets audited and goes out to the world. Management can ask to have any other type of report created that they find useful, right? Sales by division, expenses by union or non-union employee, all kinds of things. Anything they need to run the company. And those are called management reports, and they're not included with what gets published to the real world. So the management isn't limited to just the four basic financial statements we're talking about. However, we as analysts are. Yes, ma'am.
Is that just for corporations? Or
Any company can generate any management reports they feel necessary. Whatever's useful for them.
in everything that's
But since,
audited?
no, the management reports do not get audited.
Okay.
Only the four basic financial statements do.
Okay.
That's what I'm trying to say.
Okay.
So if you don't have a publicly traded company, you don't have to have it audited. Maybe. What if your banker says, hey, I'll lend you 10 million bucks, but you've got to have your statements audited? Then you're going to get it audited anyway, aren't you? Okay? So we'll talk about that more in chapters 2 and 5, about why statements are audited and what that means. But enough info for tonight, right? Okay. Okay. So, balance sheet reports assets and liabilities. Income statement, revenues and expenses. Retained earnings reports dividends and the accumulated earnings and profits of the company since the beginning of time, right? Statement of cash flows shows you inflows and outflows from operating, financing, and investing activities. Okay? Questions? Answers? All right. Here we go. My favorite. The rules. So, remember I said accounting is really a language? How do we all know that we're going to speak the same language? Well, if it's English, basically you go to a dictionary. You look up Webster's, and if the word is in there, it's fair to use, right? What does it mean? Webster's tells you. We've all agreed that that's the common language we're going to speak. In accounting, there's something called generally accepted accounting principles. I will say GAAP until you guys are blue in the face. You won't hear me say generally accepted accounting principles too much because it's kind of wordy. So GAAP are the rules that we all follow. It's the Webster's for accountants. What does revenue mean? What does expense mean? What does balance sheet mean? Those are the things we've been talking about tonight. Okay? And that's what GAAP is, are the rules that all the accountants got together and said, this is what we're all going to go by.
So listed somewhere, like, can you go to a website
Yes, it's actually one of my links, but you can go to, you can look up generally accepted accounting principles. It is several volumes thick. It is very large and very detailed.
Make sure to read that.
Yes, if you want to impress people, buy a copy and put it on your shelf. If you have just unending, interminable insomnia, try reading it. It'll fix it.
You refer to it.
From time to time. Typically, though, there are things that get added to it. If, for example, we had some bad things happen a few years back regarding, an Enron or a WorldCom situation where some people broke the rules, so they rewrote parts of the rules to preclude that from happening again. So there are new things that come out, and you want to stay up on those. But it's a very broad, general framework that you can pick a specific subject and get all the way down to the nitty-gritty of very, very fine, little tiny, minute detail about revenue recognition or other things. Okay? More than you ever wanted to know. Okay, so generally accepted accounting. Let's test this. 1494, was that the year I said? I said 94, 64, something like that. Yeah, see? So this guy, this Italian monk, Luca, yes, good. Designed double entry bookkeeping, debits and credits. We'll talk more about that. For fun, anybody know what this is? Who said that? Oh, you did. Nice, well done. What's right in the middle underneath this big opening in the ceiling? There's a drain, because the rain comes through the ceiling. So this, double entry bookkeeping was developed long, long ago, and accountants applied their own version of the rules, and it was kind of a, loose concept for a long time until 1933. And then accountants got together and said, we're gonna set GAAP, that we're all going to follow the same rules. What do you think triggered that event?
Fraud.
What?
Fraud.
Fraud, yes, but what is specific? What? Depression, yes. 1929, the stock market blew up in everybody's face. Prior to 1929, it was a much smaller world then. Accountants did audit financial statements, audited companies, and would say, hey, here's these audited financial statements. Well, you would invest in a company because you knew the accountant and you knew he was a stand-up guy and his reputation lent credibility to them. Well, by 1933, the world got a lot bigger, and there were, New York Stock Exchange and several other exchanges. Do you know some guy that's an accountant in South Carolina who's signing off on these financial statements? You don't know him. And he might have had a certain interpretation of how to present things that's different from how I would present things or how you would present things or you would. So the accountants as a whole realized they had an image problem. To protect their own industry and their own credibility, they got together and they created GAAP so that they would all follow the same rules. And what that did is any set of financial statements you picked up, whether it be company A, B, C, or D, had similar characteristics so that everyone understood them and you could compare them to each other. Where before that, those sort of things didn't happen. Now, if that didn't exist, in a post Black Friday, stock market meltdown environment, would anybody have had any faith in an accountant saying, oh, your financials are fine? No, they had to do this, just so that, to preserve their own credibility. Clear as mud? Yeah. All right. The other thing that comes about in 1933 is the formation of the Securities and Exchange Commission. You guys have heard of them, right? They oversee all the companies who trade publicly on a stock exchange. They look at financials, they make sure that the company on the exchange has had those financial statements audited by a CPA, and that they meet the requirements set forth in the law, and that the information is presented fairly for everyone. You guys have heard of insider trading? If certain people have insider information, they get a benefit. They can make more money in the market than other people. So everything must be presented to everyone at the same time in a fair and equal manner. Okay? So they're kind of the police of the whole deal. Every company that's traded on a stock exchange sends their financials to the Securities and Exchange Commission and publishes them to the world. These guys maintain a big website called Edgar Online where they publish all this stuff. You can go find anybody's public filings there. Annual, quarterly, the whole thing. Okay? Accountants got together and created what eventually became the Accounting Standards Board, which is, and this doesn't make sense, but the acronym is FASB, Financial Accounting Standards Board. And they're the guys who create GAAP. SEC has input to this group on what should be in GAAP. These guys push back, and together they, manage what is generally accepted accounting principles. Good? Okay. These are all things you just got to memorize. Yes? Securities and Exchange Commission. Okay? If somebody does something wrong, if there's an Enron situation, who goes and sues these guys and takes them to court? The SEC. On behalf of all the investors or potential investors. Everybody. Things you need to understand. Companies must have their financial statements audited so that they can be traded on an exchange, so their stock can sell on an exchange. But they also pay to have the audit done. So General Motors pays the auditor to audit their books and sign off on a report saying that those statements are accurate. It says there's no material errors in them, basically. Okay? So the information that's in that report affects whether their stock price goes up or down. Think about it. How are a lot of the big executives compensated? Stock options. Which way do I want my stock to go? Up. So I have an incentive to massage the numbers. But if I'm having them audited, what's the likelihood that's going to happen? Very low. Is it impossible? No, but it's very low. A lot of times CEOs and other managers are compensated. They get a bonus based on profits. Right? So I want to pump the number up. Well, not if it's being audited, right? The trade-off, though, I talked about earlier. In those notes and in those financials, all of your competitors can see a whole lot of stuff that you probably would rather they not see. What? All right. I thought somebody had a question. I'm going to skip this slide. I'm going to skip most of the other slides that talk about this. We've had generally accepted accounting principles since the 30s. There's a group that got together and is trying to create a global set of standards called International Financial Reporting Standards, IFRS. And some countries are adopting it, some aren't. We're sort of leaning that way, but not going. This was thought to be a slam dunk 10 years ago, and it's still languishing out there, and it's not really moving. So I'm going to kind of leave it. But just so you know, there's a group out there trying to create a worldwide standard. Given that the U.S. is 25% of the world economy, I don't know why we just don't all use GAAP and call it a day. But you will see over time that they do have some ideas, and rather than us adopt IFRS, I think you'll see convergence where the two systems are modified over time and come fairly close to being the same. But I don't know how far away it is, so I'm not going to spend a lot of time talking about it, just so that you know it exists. Okay. Here's some interesting stuff. Management of a company, they run the company, right? They're responsible for the accuracy of the financial statements. All too many times I've had students say, oh no, it's the auditors that are responsible for the accuracy. No, the auditors test the accuracy. Management is responsible for the financial statements, the information gathering process, the analysis, the presentation. That's all management responsibility. That's why who goes to jail if the SEC comes and knocks? Management, right? Who? Okay. Management's responsible for putting in internal controls that minimize risks that errors would occur. They're the ones who hire the independent auditors. Auditors must be independent. We'll talk about that more later. There's also a committee of, remember we talked about the board of directors? It used to be pre-Enron that the CEO and the CFO and those guys would be in contact with the auditors, and they would, that's where all the communication went between the auditors and the company. Post-Enron, the discussion was that the board of directors, the shareholders didn't know all the things that the CEO was hiding. So now there must be a committee, a subcommittee of the board that has contact with the auditors as well. Okay? What is an auditor? Auditors are CPAs. CPAs are the only people who are trained, tested, and authorized to express an opinion on financial statements for purposes of publicly traded companies. And again, they're expressing an opinion. They aren't proving every transaction to prove that it's right, but it's as right as they can figure, and it's fairly presented to the public. That's a big word. Think about that in terms of the SEC is out to protect the public so that they don't get cheated into investing in some bad company. Are the financial statements fairly presented? Is the information there in a way that's readable, understandable to the common individual? Fairness is an important concept there. For everybody, not just sophisticated investors, big money guys, your Warren Buffetts or guys like that. Everybody. Independent auditors, their responsibility is not to the company. So if we were to get hired to go audit General Motors, do we have a duty to General Motors? Well, we do. We've been hired to express an opinion. Who is that opinion addressed to, though? It's to the public. Our duty is to the general public, the investors, the creditors. Okay? So if you look at the letter to the letter that goes with the financial statements, the opinion letter, it's addressed to the public. Okay? Public Company Accounting Oversight Board, a lot of letters there. They've come together and they've been formed to create the standards that accountants follow. What are the procedures you use to go audit financial statements? And they have very detailed procedures depending on what industry you're in, whether it's oil and gas or high tech or biotech or whatever. So there's a lot of framework here involved in making sure that these statements are fairly presented with pertinent information that's as accurate as possible. Again, is an audit going to guarantee that the statements are perfectly accurate? No, it makes no such assertion. Okay, so the auditors go out and they examine the financial reports to make sure that they follow GAAP. Okay? They look at transactions and they look at the systems in place to see what's the likelihood of there being a mistake. And they test transactions. Were there mistakes made? And if there were, they tell management, hey, here's these mistakes and we recommend these corrections. If management chooses not to make the corrections, what do you think happens? You get a bad report. Do you want to publish financials that say they didn't make the corrections? No, right? The first thing's going to happen is somebody from the SEC is going to show up in the lobby, right? Then they express an opinion on the fairness of the presentation of the information. Again, there's that concept of fairness, so that it's for everyone. These guys, AICPA, American Institute of Certified Public Accountants, is the group of all the accountants in the U.S. Not only are there rules for GAAP that we all follow, but there's a code of ethics that all accountants follow. You must be independent of the company you're auditing, is a big one. And what does independent mean?
You don't have any affiliation.
No affiliation. My sister isn't the CEO. I don't own 10 million shares of GM stock, but I'm going to audit GM, right? I have a vested interest. Those sorts of things. I'm not getting kickbacks in exchange for writing a good opinion, things like that. So they've got this great big list of ethical elements and things you must follow. And these boys are serious, okay? CPAs are the only ones who are authorized to go in and conduct audits and write opinions. You violate these, they kick you out of the club very quickly. Very, very quickly. Because you tarnish the reputation for everyone. And all these guys have is their reputation. I'm saying it's okay. You believe me because I said it's okay. Well, but last time you were, no. You know, you want to be very clean and not have that tarnished image. It's very, very important. Here we go. That says it. And as we found out from Enron and some other things that have gone wrong, who else gets sued by the SEC? The accountants. How many large accounting firms are there these days? Anybody know? These days, they're called the Big Four. When I was in school, there were 8 of them. It was called the Big 8. They did all the audits. Now there's only 4 of them left, because some of them got sued for everything and are gone. All you got to do is make one mistake on a major-sized company. Okay, think about it. You've got a company the size of Toyota. You make a major screw-up, and they have millions of stockholders. You have a class action lawsuit that's going to cost you tons of money to defend. And if they get awarded any money, you know it's millions and millions of bucks. Poof, those guys are gone. Okay? Okay, here we go. Real quick, just a refresher for a lot of you. Sole proprietor was the kind of business entity we dealt with in Accounting 151A. A sole proprietor is one guy who says, hey, I'm going to go into business tomorrow. I'm going to do X. I'm going to open a bookstore. I'm going to be a landscaper. I'm going to be a dentist. I'm going to be an attorney. Okay? I'm going to form a business. All you have to do is say, I'm in business. And it happens. Partnership is where you get 2 guys that hold hands together and go, hey, we're going to be in business. Right? Corporation is what we're focusing on in this class. This is where you go out and you generate capital by selling stock to individuals. This is IPO territory here. We want to start a company that's going to build electric cars in Fremont. And we're going to need to build a car assembly plant. How much money is that going to cost? Millions of bucks. Who's going to go, all right, I got millions of bucks. Here, let's go. Let's play. No, you go out to the public and you say, who wants to play with me? Here's my company, here's my idea. Who wants to buy stock in it? So that's what we're doing here. Again, it's a financing concept. This is how I go generate millions of dollars to play in the deep end of the swimming pool. If you have a sole proprietorship, let's say you're a landscaper, and you're driving home after working 6 days straight, and you're kind of tired, and you roll through the light in front of the kindergarten down the street, and you run over a little kid. Okay? I know, it is. It's great. It's the worst thing I could think of. You are going to get sued. You're going to lose the truck. You're going to lose your house. You're going to lose everything you own, right? Because a sole proprietorship has what's called unlimited liability. There's no distinction between you and the company. They can sue you because you are the company, and they can get at any asset you own. In a corporation, if a delivery driver for, I don't know, one of those guys delivering those GM cars, driving the big truck full of cars, right? You know, runs into somebody at a stoplight and smushes the car. Does the family of the little old lady driving the car go sue every shareholder of GM? That's not practical. It's impossible to do. A corporation is, to form a corporation, you have to go down to the state you incorporate in and file a bunch of paperwork. You become recognized as a person, just like you or I. We're a person. We can be sued. We can have bank accounts. We can enter into contracts. A corporation is granted that same status. So the only thing that the family can do is sue the corporation. And if the corporation loses, they can take all the assets of the corporation that they want, but they cannot come to the shareholders and say, hey, we want your house, and we want your house, and your bank account. It's called limited liability. They can't take more away from you than you paid for the stock. So there's like a firewall there. Okay? In a sole proprietorship, if it's me and I go into business as a landscaper, and I work so hard I have a heart attack and die on the second lawn, does the business continue?
No.
No, the third guy's not getting his lawn mowed. Okay? In a corporation, it's treated as a person. If there's 10 million shareholders and one of them sells his shares to someone else, does the company end? No. You have what's called continuity of life. The shares can sell all they want to as many people as they want and churn through, society all day long. And the corporation goes on and on. If the CEO retires or dies and gets replaced, the company goes on. To end a corporation, you have to go back down to the state and file a bunch of paperwork and pay all your final taxes and say, we don't want to be a company anymore. And they punch you into the computer as being deceased. Okay? Ease of transfer of ownership. If I want to sell my landscaping business, I have to find some guy who wants to be a landscaper, don't I? If I want to sell my stock in General Motors, all I do is call my broker and say, hey, sell my stock. Poof, they're gone. They put them on the exchange, they're gone. Talk about easy to transfer, right? I sold my fractional share. And again, I use this example when I started off. If I want to build electric cars in Fremont and I need to raise millions of dollars, you go sell stock. Corporations are how you can raise lots and lots of money. Here's the downfall, boys and girls. Corporations, because they're an individual, pay tax, just like you and I do. Okay? And everybody goes, oh, corporations should pay more taxes. They pay tons of taxes now. Here's why. The corporation gets taxed on its income. Then they declare a dividend and they pay it out to the shareholders. Then you get taxed on that. The tax gets hit twice. So the dividend is taxed and the net income is taxed. But isn't the dividend part of net income? Yes, it gets taxed twice. Yes?
So if there's no dividends paid out, do they only get taxed once?
Right, but the dividend stays in the company, and eventually it has to get paid out. Eventually, When you wind up the company and you end it, all of that has to get paid out. So eventually, you're paying it. Okay?
When is that?
Well, when the company's going to end, it has to sell all of its assets and return whatever cash is left over to the shareholders. That's going to be a distribution that gets taxed. Part of it's not. Okay?
Why they need to pay no taxes?
That's the cost of being allowed rights to be an individual. We're going to recognize you as a person, but in exchange, you're going to pay us tax. So that's just how it works. Okay? Sir?
Is there really much of a difference between limited liability kind of corporation and just a regular corporation?
Yes. Because you can form a limited liability company, and you have some flexibility. You can opt to be taxed as a corporation, or you can opt to be taxed as a partnership. And if you go for partnership, then you're only taxed once. There's lots of other things too. But specifically on that issue, that's the thing. Other questions? Good? Bad? Indifferent? Supplement B. We're done with this, right? Moving on? You guys can read the supplement at home, yeah? Cool. So what I want to do then, off, stand by, yes. I'd like to play around a little bit. You guys okay with that? What does stand by mean? Yeah, I'm standing by. If you push the on button, you get nothing. If you push standby, thank you. I'm a little slow, but we'll get there. Okay, so I want to cover some basic accounting stuff. It'll be a good refresher for this side of the room who's largely been in 151A, and it'll be a good introduction for those of you who haven't had it before. A lot of people get nervous about accounting. They think it's some special voodoo thing. I want to knock that out right now. So what we're going to do is we're going into business together. Okay? What kind of business do you guys want to get into? Something simple.
Scuba diving shop.
Scuba diving shop. Good. Any objections?
One scuba dives, right?
Yeah? Or hey, we could be really flaky and we could be consultants. Right? Help people get into college, right? Okay. Let's open a scuba diving shop. Okay? So, to do that, what's the first thing we're going to need? Money. How much money are we going to need?
A lot.
Oh, what? I heard a number over here other than a lot.
15,000. No.
No? Let's crank it up. Come on. $50,000. Okay, $50,000. So if everybody gets their wallet out and gives me $100 real quick here. No? Okay. You can't blame me for trying. Okay, so what do we need? We need money. Right? And I'm just going to write this down. I want colors. Does anybody remember the basic accounting equation? It's still over there for those of you who don't remember it. Okay, assets equals liabilities plus owner's equity. Okay? So, we need cash. We need $50,000. So we all put in $50,000, and I'm going to add $50,000 cash to our assets. Good? So we put this money in. What do we get in exchange for it? Yeah, which is actually, in our case, stockholders' equity, but I get $50,000. So, here's the trick to this. Does everything on this side of the equal sign equal everything on this side of the equal sign? Okay, so the technical term there is my transaction is in balance. Okay? Okay. What's the next thing we're going to need in our company to get it going? A place. Okay? So we're going to have to pay some rent, but the landlord, we don't have any credit, so the landlord wants us to pay a year's rent in advance. How much is the rent going to be every month? $1,000. So how much rent are we going to have to prepay? So I'm going to abbreviate here. Prepaid is PPD, prepaid rent. We're going to give the guy, let's go. I'm making a mess of this. Oh, cash. Prepaid rent. I'm going to give the guy $12,000. Okay? I gave up $12,000 in cash. And I got prepaid rent. So this cash balance goes which way? Up or down? Down. We're accountants, so we don't put a minus sign in front of it. We put it in brackets, right? Okay. Negative this plus positive that. It's all on this side of the equal sign. Is it in balance? So I'm good there, right? Okay. What else are we going to need? We got a place. We need what? Equipment. Okay. So we're going to buy some equipment. I need a new account. Equipment is EQUIP, or sometimes it's just EQ if I'm being lazy. Okay? How much equipment are we going to need? We need tanks, we need regulators, we need wetsuits, we need all kinds of stuff, right? Okay?
ACs, wetsuits, tanks, masks, snorkel, fins.
How much money are we going to spend? 20 grand, right? All right. So I'm gonna buy 20 grand worth of stuff. I get $20,000 worth of stuff. How am I going to pay for it?
Do it on account. Yeah.
On account. What does that mean?
I mean, somebody's going to loan us some money.
All right. So everyone understands in the business world, to facilitate, to make it easy to do business with people, companies will give you what's called standard terms. You can sign for it today, pay me in 30 days. Okay, standard terms are 30 days. It's what's called an accounts payable. An accounts payable is what? Liability, because I have to pay for it later. AP, $20,000. We're a brand new company, we have no assets, and this sap gave us credit. I love it, right? Okay, does this equal that? Okay, notice they're both positive, that's cool. Everybody good with this? Yes. All right. What else do we need now? A what? A pool. I'm assuming our place has a pool.
Insurance.
We need insurance. Okay. When you go buy insurance, they typically make you pay for it in advance, right? So we're going to get prepaid insurance. How much is our insurance going to be for a year? Make it easy. $1,000. $5,000. Ooh, that's steep. Wow. Okay, let's go for $2,000.
Do business.
Yeah, I know. How are we going to pay for the insurance? Cash. Okay. Cash goes down though, right? Okay. Is that in balance? Okay. What else do we need? What? Advertising. We could create prepaid advertising. It's going to be just like prepaid rent.
We need employees.
We don't have to pay them yet because we're not open yet. Right? Okay, so let's stop there because let's keep it simple. So we've done some stuff. We've got everything together. We're ready to open, but we haven't opened yet. Sound reasonable? Okay, so what I want to do is test to see that I know that each transaction is in balance, but are they all in total in balance? So what I'm going to do is I'm going to take each of my categories And I'm going to total these. How much cash do I have? 50 minus 12 minus 2? 36,000. How much prepaid rent do I have? 12. Equipment, I have 20. Prepaid insurance, I have 2. Accounts payable, I have 20. Stockholders' equity, I have $50,000. So, let's do the math. This equals this plus that. So this plus this plus this plus this. All of my assets add up to what? 70 even? No. Yes, it does, doesn't it? Okay. You've been in my class before. Do you trust me with math after 7 o'clock? No. Okay. 70 equals 20 plus 50. So the whole thing's in balance. Everybody see that? So a couple of things I want to point out. Notice how every transaction I had an entry twice. I had 2 entries for every one. That's double entry bookkeeping or double entry accounting. Okay? Each transaction's in balance, and in total, when I add up all of my categories, I'm still in balance. Okay, for those of you who had any fear of accounting whatsoever, you just did it. You just did accounting. That's the nuts and bolts of how it all works, how things get recorded. From there, we're going to create a financial statement from this. Can we create an income statement? No, because we don't have any sales, we have no expenses, but we can create a balance sheet from this, right? We can create a statement of stockholders' equity. It's got 1 line, beginning stockholders' equity. Actually, 2 lines, beginning 0, additions 50, ending 50. We're done. Okay? In the real world, each of these categories is called an account. Every company has what's called a chart of accounts. And a chart of accounts is only a list of all the accounts that they use. It's just a list. And they're always in assets first, liability second, stockholders' equity third order. And it's just a list. If we had revenue and expenses, they would come further down the list. Good? It's about as hard as it gets. Yes?
Are we doing worksheets and journaling entries in this class?
But you did so well on them before.
Well, yes or no?
You will not do a worksheet in this class, but we will do journal entries, we will do analysis and closing entries, things like that. Because you need to understand how they work, especially in relation to how we're going to analyze. This is it. This is accounting right here. Next week when you come in, we're going to add revenues and expenses, and we'll take a company and we'll go further and we'll actually do transactions. And I'll show you how it works. And we'll create financial statements. Okay? And I'm going to show you just how really easy it is. Then the rest of this class is we're going to talk about how prepaid insurance gets used, how equipment gets depreciated, things like that, and the impact that has on the financial statements, because you need to understand that to do a good job analyzing those statements and determining if the company is a good investment or not. All right? So we're being analysts. We're going to figure out how to invest our money, and we're going to make a recommendation. But in the process, we're going to learn accounting fairly well. Fair enough? Questions, anyone? Who's had enough? Too slow, we're staying. Okay, so I want to answer your question from earlier if you don't mind hanging out. If anybody else has questions, come see me. If not, you know what your homework is. You know where to find your syllabus and your assignments. And I'll see you next week, okay? Yes? Oh, hey. Excellent. Thank you for reminding me. Remember, before you guys go, remember I forget things. I don't take attendance normally.